So I got a comment from one of my subscribers. He wanted to understand what is the VCP pattern that Mark Minervini talks about in his books. And he wanted to see an example of VCP pattern on the Indian stock market. So to answer his question, I decided to make this short, quick video. I think the best example of the VCP pattern came in a stock called Tata Investment in the Indian market last year in November, because November October period last year 2023 was a time where a lot of stocks were breaking out of well formed bases. So that was a best time to be in the market for breakout trading style. Unlike these days, where past 3-4 weeks the foreign institutions have been pulling money out of the Indian market, so the market is under pressure. So VCP means volatility contraction pattern. So let me show you that pattern on Tata Investment. So let's go to Tata Investment. And I remember it was 15th of November, I guess, last year, 2023, 15 November. Yeah, have a look at this breakout. Let me hide this so that you will, yeah, have a look at this base. Okay. Remember, volatility contraction pattern has got 3 steps. Step number 1, high volume rally. Step number 2, low volume consolidation. Step number 3, high volume breakout. Please write that down. Okay, I am going to repeat it for you. It is extremely important. For every stock that I am considering for purchase, I am looking for these 3 factors. If I am getting these 3, I know that I am in a good stock. So number 1, high volume rally. So if you notice here, suddenly there is a volume spike, okay, and there is a rally in the stock. So this is called as a high volume rally. So from here to here, the stock completes step 1. Step 1 is high volume rally, and from here till here, you see there is basically a consolidation, low volume consolidation. So step 1, high volume rally. Step 2, low volume consolidation. Step 3, high volume breakout. After this, you need a high volume breakout, which comes like this. See, huge breakout came 20% up in a single day, and the next day, another 15% up. But let me hide that for you. Let us not get ahead of ourselves. Let us first understand the base. How do you take advantage of this candle before even that candle forms? So how do you identify the buy point? How do you know that this is the day when the stock is going to break out? So we will apply our normal rules. Normally, we do 3 kinds of analysis: comparative analysis, technical analysis, fundamental analysis. Now, I am not going to do all 3 kinds of analysis because we are looking at a historical chart, because I don't remember what was the relative strength or the, what do you say, group industry rank at this period of time. So this is, we are talking 1 year back. Okay. So let's assume that the stock is comparatively fundamentally strong. In this video, we will only focus on the technical aspect of the stock. So what do we look for technically in a stock? Number 1, we look for blue, green, red. So the 50-day moving average should be above the 150-day moving average, which should be above the 200-day moving average. So blue, green, red combination. Preferably, all 3 moving averages should be sloping up. Preferably, the price should be above all the 3 moving averages. Okay, let me hide the short-term moving averages for you. Okay, see, the long price is above the long-term moving averages, long-term and the intermediate term. So blue, green, red. That's our first criteria. Second criteria, there should be minimum 10 candles in the base. So first, let me draw the base for you. So from the high point till this low point. So this is the base. Okay. There are minimum 10 candles in the base. So this completes point 1. So I start counting from here: 1, 2, 3, 4, 5, and so on. So easily there are more than 10 candles in the base. And we need minimum 4 points in the base. So this has more than 4 points. In fact, This has got 6 points. So let me show you how to draw it. I have shown it multiple times, but this would be a good revision. So point one is the highest point in the base. Point 2 is the lowest point in the base after point 1. Point 3 is the highest point in the base after point 2. Point 4 is the lowest point in the base after point 3. Point 5 is the highest point in the base after point 4. And point 6 is the lowest point in the base after point 5. So those are the definitions. You might want to listen to that again so that it helps you draw the chart properly. So if you see, if we consider point 5 as our buy point, what is point 5? It is 3339. So let me draw a yellow line here. So 3339. Okay, that's our 3339. That's our buy point. So blue, green, red, 10 candles, more than 4 points in the base. On top of that, the icing on the cake is there is a mother baby candle combination. So if you notice, this is an inside bar. In Western technical analysis, they call it an inside bar. The high and low of this candle is within the high and low of the previous candle. That's called as an inside bar. I call it the mother baby candle combination. Okay, this is the mother candle, this is the baby candle. What is the implication of that? The implication of that is whenever you see a mother baby candle combination, a breakout is imminent. Now, we don't know whether that breakout will be an upside breakout or a downside breakout. Just because you see a mother baby candle does not mean that you should get excited. The mother baby candle indicates that there is a breakout that is likely to happen. We just don't know on which side the breakout will be, whether it will be upside breakout or whether it will be downside breakout. In this case, since the stock is uptrending and it is following our first two steps, we can reasonably expect to have a breakout on the upside rather than downside, correct? So once you draw the yellow line, you might want to draw another yellow line, which is 1% above the first yellow line. So 3339 multiplied by 1.01, that is 3372.39. So 3372.40. So 3372.40. That's our second yellow line. Okay. So now we have a band. So if the stock breaks out the next day, okay, we could choose to buy the stock within that band. Okay. As long as we buy within that band, we are not buying an extended stock. So let's see what happens the next day. The next day, the stock shoots up 20%. So there is time to buy the stock here in this yellow band. Okay. And the next day, it goes up even further. So it's a very powerful breakout. And before the breakout, just look at the characteristics that we saw. Blue, green, red, 10 candles, 4 points. The icing on the cake is mother baby candle. Another icing on the cake is the yellow line is in the blue zone and we have 6 points in the base. Generally, if there are 4 points in the base, I don't consider that as a valid base because I need minimum 6 points in the base because in the blue zone, the risk is relatively higher than the risk that we have in the green zone. So this is the volatility contraction pattern. It generally has 3 steps. Details you can read in Mark Minervini's book. But step 1 is high volume rally. Step 2 is low volume consolidation. Step 3 is high volume breakout. So high volume, then you have low volume, and then you have high volume. These are the 3 steps that you would like to see when the stock develops, when the base develops. Now, you notice this base was almost 2 months long. It does not matter how long it is. What matters is the volatility contraction. The volume has contracted and the price has contracted. As we draw the points in the base, you will see the price getting narrower and narrower and tighter and tighter. That is why it is called as a volatility contraction pattern. Actually, it is not a pattern. It is a characteristic of a pattern. The pattern is the base. The base is the pattern and the volatility contraction is a characteristic of the pattern. You will read this in detail in the book. Anyways, this is the example that I wanted to show you. So these are the characteristics that I look for. And I think this was the perfect example in the Indian stock market in my experience. I have not seen a stock which broke out as perfectly as this stock has broke out. I wish every stock could do like this. Generally, stocks should break out and then fall back down, but this was continued to go up. Okay. After this, it formed another base. That base lasted for 2-3 months, and then again it broke out from the next base. You can check the chart later. But this is the volatility contraction pattern. Now, in the book, you will not see point counting. Point counting is something which I developed for myself to simplify the base for my analysis, and I teach this to my students. Okay. So I hope I have answered your question. I don't remember who asked that question in the comments, but I hope I have answered that. Do not forget to download the checklists that you will find in the video description, the swing trading checklist, the position trading checklist, and the stock categorization checklist. Thank you so much for your time. Thank you so much for your support on this channel. I will see you in tomorrow's video.